Hey everyone, I'm Cary Smith and I'm sitting here with Amar Shah. Amar and I are both with Client First Capital. And so Amar, today we're talking about what higher oil prices mean for your portfolio. And when we first started talking about doing this video about a week ago and started preparing for our conversation today, we were, things were really, I don't want to say spiraling out of control, but we were in the thick of a little bit of chaos in Iran. Things have changed slightly this morning. We're in the early hours of the ceasefire. And so, but I think maybe this conversation is even more relevant than before because it I think goes to the volatility of the region and of what's happening now with oil prices. And then I also think that we're a long ways from being out of this spike in energy costs that we're seeing right now. And so I think this is really a good conversation for us to have today.
Yeah, you're right. Yeah, when most people think about oil prices, they think about gas prices. And, I live in San Diego, California. And so everywhere gas has all of a sudden gone to above $6 a gallon for every type of gas. And diesel in some areas is almost $8 a gallon. And so that is one impact, and that's an immediate impact, and it's just on the surface. I think today what we're going to try to walk through is 5 real impacts to a portfolio. And to illustrate this, I kind of just want to pull up a chart real quick to kind of explain why this has been a big concern. What you'll see here is a chart where I've created a purple box between $60 and $80 a barrel. And what you can see is that most energy prices stay between $60 to $80 a barrel. That's where producers make money, and that's where it doesn't really have a large impact on inflation. And what you see as we come towards the end here is we've spiked almost at one point $120 a barrel. And now we're starting to see this coming down. And I can zoom in on this portion where we're starting to come down here, but we're still significantly above $80 a barrel. And why that's important is that anything above $80 a barrel is going to create inflation. It's going to have an impact on the economy. And we're going to walk through some of those impacts today.
Yeah, and so what I like about this is if you understand how oil feeds into growth and inflation, you're already ahead of most investors.
Yeah, exactly. And so, taking into account for this is oil is an input cost, right? Mm-hmm. And so it impacts almost everything. It just impacts things at different rates. So when we think about transportation, like gas prices, that was almost immediate. But it's also going to impact food, goods, services. So it shows up quickly in headline inflation, but also somewhat stickiness in the real world economy, as long as, even if the oil is coming down, as long as it's above 80, it's sticky and it's going to work its way through the system. So look at this impact not as short term, but more prolonged.
Yeah, so oil is one of the fastest ways, right, that inflation shows up in our real economy, right?
Yeah. The second thing I would say, the second impact, it's kind of like a tax on consumers, on spending. So when consumers that don't earn more because oil has gone up, or if you're a retiree on fixed income, when gas goes up, you spend slightly differently, where you're redirecting funds to other things. So think about gas prices go up, you're on a fixed expense, then dining out, traveling, retail purchases, those all tend to go down. That's where you make those cuts immediately.
Yeah, and so you don't just see it at the pump whenever you go for to fill up your car, right? That's not the only place that higher spending is happening, but businesses face higher input costs as well.
Exactly.
And just say a little bit more about that. They have kind of 2 choices, right? They can raise prices, which creates its own problems, or they can absorb the cost and lower their own margins.
Yeah, I mean, on one side, you're risking demand of future sales by raising prices, right? And then if you absorb the higher input costs, kind of like with tariffs and whatnot, then if you absorb those costs, then you're not making as much profitability, and those margins have definitely declined. So when we look at sectors or industries, airlines, logistics, manufacturing companies are definitely going to get hit, with those input costs, right? And
Yeah.
so that's something that we want to consider, is that not that we only look at the price of oil, but the time spent above $80 a barrel, in those impacts on business owners.
Okay. So yeah, so a lot of industries hit: airlines, logistics, manufacturing, right? That's where you'll see those impacts. You'll see them early, right? And so, excuse me. So we talked a little bit about inflation. One of the other impacts is growth, and so let's talk a little bit about how it impacts growth of our economy.
Yeah. So as consumers pull back, um, as consumer spending pulls back, lower margins, that's definitely going to have pressure on growth to slower growth, or have declining growth, in terms of pressure. Um, we talked about businesses slowing investments. I mean, these are all things that will trickle through our economy, and growth could be negatively impacted. Now, we've already started to see a slowing in growth, right, since Q4 of this year, where labor numbers have started to kind of deteriorate. This could kind of be an accelerant to that. So we could see growth really accelerate down if the cost of oil continues to be high. And then I would say, the fifth problem here, or fifth impact, is Fed decision making.
Mm-hmm.
You know, when you have high inflation, which oil is a core input into inflation, you have tightening of uh, monetary policy, but then you have growth slowing, so then you have to ease monetary policy. So now you've gotten to a situation where the Fed has some tension within their decision making. And I think where the real impact of this happens is that when we look at, rate cuts, which we've been talking about the Fed, not doing rate cuts, and puts them on the fence. That kind of puts further pressure on that decision that the Feds make.
Yeah, so you don't want to put more pressure there, right? Because this is, I would say, directing and guiding an economy through these types of policies is difficult enough, and this just puts a lot more tension on those factors, and maybe makes some of the controls a little less effective. And so, Amar, so I want to switch now, move on to talk about the impact on our portfolios, and so
Yeah.
you're the chief investment officer. You're the one, in those portfolios and making these decisions. So why don't you share with us, kind of from your lens, how this affects portfolios?
Yeah, so let's go with a broad overview, and then we can go into the process and kind of how we're looking at it. So from broad perspective, equities, there's going to be more downward pressure than there is upward pressure. The only sector that's looking better now than before is energy.
Mhm.
And so everything else is having more downward pressure. Bonds, as inflation ticks up, yields could go up. Growth slowing down means that the Fed will have to reduce interest rates on long term, and so yields may later, in the back half of Fed policy decisions, could come down as well. So there's some initial yields going up, but potential for lower yields later. Commodities, core prices generally will be raising higher, and so the positioning matters more now than ever. And with our framework, with our quad framework, we've been positioned for quad three, which is stagflationary type setup, with inflation going up and growth going down. What we tend to do in that is have a more defensive position, make sure that we have cash on hand, And when these cycles happen and the market structure is changing, that when we hit a position where we can add more to our positions, we'll definitely be looking to do so. So this is why we focus on regime-based investments. We're not statically allocated to a 60-40 portfolio. This is why we have more cash than we've had in the past. And if the data changes, we make changes. And to summarize, I think for this video, you should consider oil and the time spent above $80 a barrel as inflation up, spending power down for consumers as well as businesses. Growth slows at a faster rate, so it's accelerating the pace of the slowdown, and volatility within the markets rising.
So Amar, thank you for that. Yeah, so it's good that we're not focused on the headlines, but more on the data and the process, right? So I appreciate your insights, Amar. If you're watching this video, chances are you're watching it because you're currently a Client First Capital client. And but if you came across this video and you're not, if you want to reach us, you can find us at clientfirstcap.com. From there, you can reach out to us, either give us a call or just reply to us on our website, and we'll respond back to you. Schedule an appointment if you'd like, and discuss your portfolios and opportunities as well. Amar, again, thank you for your insights, and appreciate everyone watching.
Thank you, Cary.
Thanks.